and welcome back to the channel. And this video we're going to learn about what an ETF is and the pros and cons of it. So let's jump straight into it. So before we jump into what an ETF is, make sure you subscribe to this channel. I do investing content, trading content and finance-based content. I might leave that in, especially for beginners. So if you're a beginner investing or you don't know what it is, then obviously subscribe to this channel. This channel is for you. And obviously while you're at it, if you like this video, like it. So what is an ETF? You might be racking your brain when you're scrolling through your broker thinking, ETF, what does this mean? It's an exchange traded fund. Now basically imagine a basket full of stocks. A nice analogy would be like a celebrations box, the sweets. There are other sweets available on the market, but obviously when you open up the celebrations box, you have lots of different types of chocolates. Now some of them you like, some of them you don't like, and obviously that will be the case with an ETF. If you look into the details of an ETF, you'll see that some stocks you'll like and some stocks you probably won't like. But it's all to do with balance and the safety behind investing. So the first question you may ask is, why should I buy the ETF? Now it's really as simple as this. You just get that diversity within your portfolio straight away, and you don't have to pay as many fees as you do with different stocks. Say if you bought, for example, Tesla, NIO, Palantir, Apple, Google, Amazon, all of those would incur 6 different fees. Whereas if an ETF, you have just one fee. Now, obviously that is a good pro, and we'll get into some more pros later on in the video. So buying an ETF is basically just reducing that question of what stocks should I buy? What stocks do I want to buy? What do I want to invest in? All those questions are answered by buying the ETF, because you don't really have to care about what's in the ETF. Obviously you have to know a little bit about it. For example, the S&P 500 ETF is the top 500 greatest companies in the US. That's normally a pretty good sign if the top 500 companies are in one space. Now, a lot of this obviously is a very popular one. There's lots of different variants of it as well, with different companies, and I keep saying different, but you know what I mean. But yeah, there's lots of different companies within the ETF, and it just gives you that diversity straight off the bat. And that's why you should buy an ETF, especially if you're a beginner, just because it erases that question of what should I buy? Now with that example, I'm going to answer the next question, is how does it work? So it's really quite simple. Say for example, those S&P 500, there's 500 stocks in there, and they're all differently weighted. Now what I mean by that is how they all have different percentage of the pie. So imagine a big circle, and everyone is like a little segment of the pie. There's 500 sections of the pie, and companies like Apple, Amazon, Microsoft and Google will have bigger segments just because of their market cap. They're bigger companies, they have much larger revenue, which makes sense if you think of it, because it's safer that way. If the bigger companies are making that money, they're keeping it stable, and then whereas the smaller companies are not so good with their revenue, or they may miss a target for 1 month or 1 quarter, and then that just brings that down. But don't worry, the big boys like Apple and Amazon are putting up this S&P 500, and that's the way you should kind of be looking at it. It's more of a safety aspect. Now obviously with all investing, it is all a risk. Now don't forget that. Obviously investing is a risk, your capital is at risk, that kind of thing. And I'm not a financial advisor, so I'm not advising you to buy anything in specific. I'm just giving you guidelines of what it is and what you can expect if you did invest into it. Before we jump into different types of ETF, make sure you subscribe to this channel. I really appreciate it, especially if you're a beginner watching this. I do all sorts of beginner videos for investing, trading and finance tips as well. So I'll see you over on the channel, and don't forget to smash the like button. I do appreciate that. Let's jump into the different types of an ETF. Now different types of ETF are actually quite exciting. Now they could be industry based, they could be meme based, and they could just be overall market based. Let's jump into those a little bit further. So with the industry bases, you obviously have the semiconductors, electric vehicles, clean energy, minerals, everything you can think of really, drones, that kind of thing. There's an ETF for everything. So if you're particularly interested in a certain aspect of life, say if you're a gamer, there's a gaming ETF. So if you're like a car fanatic, there's a car ETF as well. So moving on, we have the overall market ETFs. You've got the Dow Jones, the S&P 500 and the Nasdaq 100, which I've already mentioned. But you also have things like the English exchange with the FTSE 100, and the German exchange, and things like that all around the world. You have the Japanese one. There's also an all-world ETF as well, so you can actually invest in the whole world economy, which obviously is going to be very slow moving because it's all come into one. Another type of ETF are the dividend ETFs. Now these are the ETFs that if you put your money into, obviously every week, month, quarter, etc., you will get a dividend payment probably every quarter. Most of them are every quarter, and that's just an extra bit of security for you to kind of either get that cash and put it back into your bank or reinvest it, which is recommended. So yeah, that's another type of ETF. So you can see the variations of ETFs you can get. That might just get you thinking about, well, maybe I should invest in ETFs instead. My personal approach to this year is to invest in them. I've invested in stocks quite kind of exclusively last 2 or 3 years, and I've been burnt with many other people. That's why I'm kind of reinventing this channel, because of the stuff I've learned in the last couple of years has been so intense, and obviously I've lost quite a bit of money because of that, but I've learned from that. So now I'm going to teach you guys to obviously not make those mistakes. So that's basically it for this segment. That's the different types of ETF. Now there are benefits to an ETF, and I've got 4 of them here written down. I am just going to read them off the screen because I'm not very good at remembering things. So you have a set and forget attitude. Now this is basically, you put your money in, you put your money into the ETF, for example, and you just leave it. You do it once a week, once a month, once a quarter if you like, and you just literally set it in there and forget about it. Come back in 20, 30 years time, and then guess what? You're a millionaire, as an example. That's the first benefit. The second benefit I think I've got here is single company market movements. Now what this means is, say for example, Tesla went up 10%, great, fantastic, but if it went down 10%, you'd be hurting. Now that wouldn't happen with an ETF. Now it could, obviously, if there was a market crash, and that's always the risk with obviously investing as a whole, but it's much less likely that the S&P 500 is going to go down 10% in one day. Therefore, reducing your 100,000 investment down to 90,000, and that could take a bit of a psychological hit. And obviously we don't want that to happen, because then you'll sell all of your coins and you'll just lose that 10,000 straight away. Now ETFs have that benefit of having all of these companies. Now if they are to move 10, 20% down, there's got to be another company out there that's going to be up 10, 20%. So it just balances it out, and overall obviously the economy generally in the last 90 to 100 years has moved up. So you've always got that kind of stat to back yourself onto. Benefit number 3 is tax based. Now obviously, because you don't have to buy and sell into all of these stocks and change percentages and rebalance, is what that's called, rebalancing your portfolio, because the ETF does it for you, and therefore you don't have to pay tax on those different changes, all the fees involved as well. So you just don't have to worry about that. So that's also another benefit in my eyes. And the last benefit number 4, we have touched on before, is there is an ETF for everyone. So for dividends, for electric vehicles, for gold, or the whole world ETF as we mentioned before, there really is an ETF for everyone. So that's my last benefit. So that's it really for this video in total. So if you did find value in this video, really do appreciate it if you smash the like button. It pushes this out to more eyes, more viewers, and obviously hopefully they can learn a bit more about investing. And with that, make sure you subscribe, and I'll see you in the next video, and make sure you watch one of these videos next. Take care.